Lots of you watching tonight will have faced increased mortgage rates recently, but there are thousands of homeowners who have been trapped with high rates for more than a decade after their lender collapsed.
Yeah, these so-called mortgage prisoners are unable to move to cheaper options, leading to poverty and, as you can imagine, mental health issues for so many. Well, Catherine Jones has been to meet one of them.
This was Martin's family home for almost 25 years, but last month it was repossessed.
So it's sad, really. Yeah. Had lots of happy memories, but ends on a sad one.
He, his wife, his daughter, her partner and their child are now living in a caravan while they look for a new home.
It was dreadful. My wife was very upset and had to take some time off work because of depression. Right, this is some of the paperwork.
Martin's mortgage had been with Northern Rock, meaning his repayments have been very high for many years.
Our most recent repayment was near enough £2,200 a month against a mortgage of £158,500. And I know people who've got a higher mortgage balance than that who are paying £600 to £700 a month.
The people who've become mortgage prisoners had mainly borrowed from Northern Rock, and when that bank went bust in 2008, the government sold the mortgages to other lenders who set interest rates of around 5%. After the financial crash, lots of banks launched new mortgages with much lower rates. But as lending rules had become stricter and ex-Northern Rock customers have poor credit ratings, those other banks wouldn't take them on. And they're trapped trying to pay mortgages that rising interest rates are now making even more expensive. So now there's a legal bid to get them compensated.
If these claims succeed, we say that these mortgage borrowers will be entitled to recover between 1.5% to 2.5% of the interest that they've paid over the last 6, or if you had a particular mortgage product, potentially 12 to 15 years.
The lenders who took over the mortgages after Northern Rock's collapse say borrowers are free to move to other providers, and the Treasury says we have already taken steps to update mortgage lending rules, removing the barrier that prevented some mortgage prisoners from being able to switch. But for Martin, it's too late.
They shouldn't be allowed to charge significantly higher rates to people who have got an issue anyway, because it is setting those people up to fail.
The 2008 financial crisis created around 250,000 mortgage prisoners. Martin is one of 7,000 now attempting to claim some compensation for what they've been through. Catherine Jones, 5 News.